going way back, sales tax was only asserted through physical presence. And similar to Public Law 86272, there was a doctrine that kind of protected a number of de minimis activities in a state that a taxpayer could perform, like visiting trade shows, kind of these short-term one-off activities that wouldn't really develop that connection between the business and the state. With the kind of birth of the internet and e-commerce, all of a sudden, as brick and mortar retail shifted to e-commerce retail, state sales tax revenue plummeted, right? Because these internet companies, did not have physical presence in most states. They were just shipping goods, which is one of those activities that's protected that, isn't going to trigger physical presence unless you're delivering goods with your own, company trucks, let's say. Unless those goods are delivered with your own commercial trucks. So states started on the sales tax side challenging where these e-commerce retailers had a presence in their state. And it worked its way all the way up to the Supreme Court, which is the Wayfair versus South Dakota Supreme Court decision. And this really was a landmark case for sales tax. It set a bright line threshold that if a business has $100,000 in the state or over 200 separate transactions, that triggers economic nexus for sales tax purposes. So that court case was in 2018. It took quite a number of years for states to slowly start adopting this. And at this point, the landscape is every state with a sales tax has an economic nexus threshold. And just a quick note, there are 5 states that do not have sales tax. Do you know what a good acronym is to remember that by, Lindsay?
I don't, Mark. Can you tell me?
I can. I heard this from an old boss while I was interning. It's oh damn, no sales tax, and that's Oregon, Delaware, Alaska, Montana, and New Hampshire. So there is an H, I guess, at the end of oh damn, but it's a good one to remember.